The Olema Pharmaceuticals Inc. (OLMA) stock is currently trading at $19.91 per share as of the markets open on November 18, 2025, reflecting an intraday gain of approximately 7.33% from the previous closing price of $7.94. This is a crucial early move, especially given the stock's significant volatility over the past few sessions. The immediate expectation for a biotech stock like this is that such a strong morning jump is likely tied directly to a press release or clinical trial data. But the deeper, more unexpected reality is that this morning's surge is less about Olema's own recent data and more about a major competitor's success. The company's own recent news, which included reporting Q3 2025 financial and operating results on November 10th and reiterating the advancement of their key trials, simply doesn't justify a nearly double-digit percentage move this quickly. What's driving the OLMA stock higher is the ripple effect from Roche's announcement that their own oral selective estrogen receptor degrader, or SERD, Biopharma, met its primary endpoint in a Phase 3 adjuvant trial for ER-positive, HER2-negative early-stage breast cancer. This is the unexpected insight. A competitor's win is being interpreted as a major positive read-through for Olema's lead candidate, Palazestrant, OP1250. The market is taking the success of a rival's SERD as validation for the entire mechanism of action within the lucrative breast cancer market, signaling heightened optimism for Olema's drug, which is also an oral SERD, currently progressing through its own late-stage clinical program. This dynamic, where the sector's general success elevates individual stocks, is a classic high-stakes biotech trading pattern that forces investors to rethink their initial, narrow focus on only one company's press releases. The general belief about Olema is that it is a high-risk, pre-revenue clinical-stage oncology play, entirely dependent on the success of Palazestrant. The common ground is that their fate is tied to their pipeline, but the contrarian take, the deeper reality, is that this stock's valuation is now increasingly being influenced by the perceived market size and the clinical viability of the oral SERD class as a whole, rather than just the specific efficacy differences between candidates. Roche's success de-risks the entire therapeutic approach in the eyes of the institutional investors, which is a powerful tailwind for Olema. We see evidence of this institutional appetite in the recent holdings reports. While there has been mixed activity, the overall institutional presence remains robust, with major players like Bain Capital, Paradigm Biocapital, and BlackRock holding significant positions as of the end of the third quarter. These firms are making big bets on the long-term success of the pipeline, and a positive sign from any major player in the space adds a layer of confirmation to their conviction. The current trading volume for OLMA stock this morning is elevated, which supports the idea of a significant shift in sentiment driven by external news and algorithmic trading reacting to the broader sector movement. The price action today is breaking above a few short-term resistance levels that had capped the stock following its Q3 results, where they reported an operating loss but maintained a strong cash position, a crucial detail for a biotech with no commercial revenue. The company had approximately $392.7 million in cash, cash equivalents, and marketable securities as of March 31, 2025, which gives them a projected cash runway until 2027, a significant cushion that reduces the immediate fear of a dilutive financing round. This financial strength is often overlooked when the focus is purely on the clinical drama. When we consider the recent trading history of Olema, the stock has been a high volatility vehicle, which is typical for the clinical stage biotechnology industry. It saw a significant spike in October after presenting updated clinical trial data at the European Society for Medical Oncology (ESMO) conference, which showed promising signs for Palazestrant in combination with ribociclib for ER-positive, HER2-negative metastatic breast cancer. This positive data initially drove the stock up over 110% in the 6 months leading up to that point. However, it subsequently faced selling pressure, partly due to broader market fatigue and partly because the positive news was quickly followed by a general biotech sell-off. The price movement today is an attempt to recover that lost ground, now with the added momentum of a large peer's Phase 3 win. Technical traders are watching the $9 level closely, as a sustained move above that could signal a true breakout, fueled not by day trader speculation, but by the genuine shift in institutional perception regarding the oral SERD market potential. The daily swings are often amplified in stocks like Olema because the float is relatively small and a high percentage of shares are held by institutional and internal investors, meaning that when volume does pick up, the price moves rapidly. This volatility is a double-edged sword. It offers high potential returns, but also comes with the risk of significant drawdowns, a factor that needs to be part of the calculus whether you're using a full-service platform like Fidelity or managing a self-investing account on a more streamlined interface like Robinhood. Now, let's step back and anchor the story in what Olema Pharmaceuticals actually is for those who are just hearing about the stock ticker OLMA because of today's price movement. Olema is a clinical-stage biopharmaceutical company focused on developing therapies for women's cancers, with a particular focus on breast cancer driven by the estrogen receptor. Their lead candidate, Palazestrant, OP1250, is an oral SERD, or selective estrogen receptor degrader, with a dual mechanism of action as a complete estrogen receptor antagonist, CERAN. The goal is to comprehensively block and degrade the ER, which is the primary driver of growth in the most common type of breast cancer, ER-positive, HER2-negative metastatic breast cancer. This is the central piece of their business model, innovating beyond current standard of care endocrine therapies, especially in patients whose cancer has progressed after initial treatment with a CDK4/6 inhibitor like palbociclib or ribociclib. Their pipeline also includes OP3136, a potent KAT6 inhibitor, which is currently in Phase 1 trials for advanced solid tumors, offering a complementary epigenetic approach to disrupting cancer growth. This is critical because it shows Olema is not a single-asset company, even if Palazestrant is the primary value driver today. Success in one area can fund the development in another, creating a flywheel effect. The company operates in a capital-intensive space, spending heavily on research and development, hence the negative earnings per share of around -$1.90 reported recently, which is standard for a company in Phase 3 trials. They don't have revenue, and they won't until a drug is approved and commercialized, which is why the cash position and clinical trial data are the only metrics that truly matter right now. Many individual brokerage users often misunderstand this. They see the negative earnings and think it's a failed company, when in reality, for biotech, it simply means they are in the crucial investment stage before a potential payday. Looking ahead, the future outlook for Olema is a tightrope walk between clinical milestones and market perception. The major catalyst on the horizon is the data from the Phase 3 OPERA-01 monotherapy of Palazestrant, with top-line results currently anticipated in 2026. This trial is comparing Palazestrant against standard of care endocrine therapy in patients whose cancer has progressed after a CDK4/6 inhibitor. Success here would be transformative, immediately positioning Olema with a potential best-in-class oral SERD, a market that is projected to be worth billions. They also have the Phase 3 OPERA-02 combination trial of Palazestrant plus ribociclib, which addresses the first-line treatment setting. The Pfizer collaboration to evaluate Palazestrant with their investigational CDK4 inhibitor, ardemiciclib, is another opportunity that can validate the drug's potential combinability and expand its addressable market. The expectation for a small biotech like Olema is always high risk, high reward, a binary outcome where the stock either soars on positive data or plummets on failure. The reality we're seeing today, however, suggests a more nuanced story. The broader market validation provided by Roche's success acts as an initial stabilizing layer that suggests the clinical probability of success for oral SERDs in general has just increased, even if the ultimate data for Palazestrant is still a year away. This could lead to a flight to quality among other SERD contenders, and Olema is well positioned with its clinical stage asset. Risks are certainly present. Any unexpected safety signals or efficacy data that fall short of what has been observed in earlier trials could immediately negate today's gains. Furthermore, the intense competition in the oral SERD space, with multiple companies vying for market share, is a constant pressure. Even a successful drug may not achieve blockbuster status if a competitor has demonstrably superior efficacy or a more favorable side effect profile. Analysts have a strong buy consensus on OLMA stock with an analysis that is provided solely for informational and educational purposes and should not be construed as investment advice, a recommendation to buy or sell any security, or an endorsement of any particular investment strategy. Investing in stocks, especially clinical-stage biopharmaceutical companies like Olema Pharmaceuticals, Inc., OLMA, involves significant risk, including the potential for complete loss of capital.